Welcome to our second session about wave accounting and how you can take the information in your organization, whether it's a nonprofit or a small business, and use this cloud-based application tool to do your accounting for whatever objectives you have, whether or not it's doing your own books to determine whether or not your organization is financially viable, or you're preparing books for your tax returns. So to start, we now will proceed. I'm going to share my screen, and I'm going to type in waveapps.com. So that's what I've put into the URL setting. And we have their login screen that has appeared. So we next are going to start with a new set of books. So we're going to create a free account. And in terms of doing this, and I'll give it a password. Create a free account. Now, Wave Accounting doesn't charge for the use of the software, but it does if you want to activate the payroll service. There is a charge for that. My name. Consulting business. I just used the drop-down arrow dialog box. And take not sure yet. Yes, I'm running a business part-time. It is a proprietorship. And there we are. We have now set up for ourselves an account with Wave Accounting. And we are able to, as a result of that, we are able to now start looking at creating our sets of books. First place to start is probably with something called the chart of accounts. Now, the chart of accounts is really the foundation of your accounting system. It is a place in which all the data, which is entered into the software, and it can be entered, through your smartphone. You can get an app for that. It can be entered from a computer at home or a tablet at work. The whole idea of cloud-based accounting is that really you can use the software anywhere you are in the world. That's a huge advantage. And the chart of accounts, if we go back to episode 1, you'll recall that I introduced you to basically an accounting equation, A equals L plus C. And you can see as I just scroll down this screen that the different accounts that are involved are essentially organized to that idea. Cash and bank is an asset account. Money in transit it's an asset. Expected payments from customers, or another set of words that are commonly used, accounts receivable, that's an asset for the organization. Inventory is an asset. Property, plant, and equipment is an asset. Prepayments or prepaid expenses, that's an asset. And sometimes you have special assets, which are called intangible assets. And possibly you have long-term assets too. And so this would be A for assets. And there we are. The next choice in front of us is liabilities. There's E for equity. And there's our revenue accounts and our expense accounts. Remember our mantra, expenses are always debits. Expenses are always debits. That's our mantra. And so I'm going to go back to assets. And for today's session, we have successfully created for ourselves a set of books. And now we're going to spend a little bit of time thinking about the chart of accounts we're going to be using. Now, the good news here is that if you, at this stage, forget about setting up an account, that's not an issue. You can set up a new account anytime you want. And you'll notice that they have, in some cases, set up an account for you. So you've been given, upon setup, what I would refer to as the bare minimum. And so as a result, we can think about, well, cash on hand, cash in bank, that's good. But there might well be a situation where we have, for example, petty cash. And so we want to set that up, maybe a cash float in our till. So we're going to click on add a new account. And so the type of account is cash in bank. We're going to call this account cash float in till. Now we could put an account ID on this, and this is an interesting idea. And there are something out there which is used by CRA called Giphy codes. Some people like putting their Giphy codes in here. That's just fine. The only real application I can think of is that for anyone that, is, for example, in the rural setting that is operating a farm and has a relationship with FCC, which is the Farm Credit Corporation, they like receiving information in a very specific format. They have reference numbers they use. And I could see a good application here where you're adopting the FCC account setup with their reference numbers, and you put in their reference number as the account ID. I could see that working well. And you could change the description to exactly the description they're looking for. And so do we need to put a description in here? No, we really don't. I've put a description here that I think will do the job very well, but I could put, cash held overnight until in cash register to make change. Could do that, don't really need to, but that's fine. And so we can save that. And we now have another account that has been added to our chart of accounts. So one of the things we're thinking about is we're just going to go through each one of these. Do we have money in transit? What would that be? Well, you may well have a situation where you decide to put some money into, for example, a term deposit, or money is in a situation where you're using, for example, Shopify, where a customer has come into a website, has placed an order. You've received the order. They've paid for it by credit card to Shopify. You've decided to ship the product, but the actual arrival of the money from Shopify to you takes 2 or 3 days. And so that would make sense for you to have a money in transit account in that circumstance. Accounts receivable, that's where you invoice a customer, you provide him or her a service without receiving payment. They're going to pay you in the future when you give them an invoice. That's really the purpose of accounts receivable. And this is really what they call hard coded, in that it's built into the ledger, and for very specific reasons, it's reasonably tightly controlled. But sometimes we have other receivables. So we may add a new account here. One of the most common reasons to have another type of receivable is that you've done a GST claim. So you're owed money, you're owed a refund. And so as a result, you want to keep track of that. So it's not what they call a trade receivable. It is that's where you are owed money from one of your regular customers. That's not what this is all about. This is all about having a receivable from CRA that may take a month or two for the money to actually arrive. Inventory is an interesting topic. We're going to spend a little bit of time on the inventory module. Suffice to say, there are two types of businesses: a service business or a merchandising business. What the difference is between the two is that a service business is one in which you just provide a service, like a lawyer or an engineer. You send the invoice and that's it. A merchandising business, on the other hand, orders product, marks it up, may add value to it, and then sells it at a higher value. And this leads to our second mantra. And the second mantra is, if you see inventory, there's going to be cost of goods sold. If you see cost of goods sold, there must be inventory. And so basically, once you have a situation where you are handling inventory that you receive and then you mark up, every time you sell that inventory values go down, but there's a cost of sales related to that sale, which is allocated at the same time to the revenue, what we call the matching principle. Plant and equipment. Now, this is a funny one because it's operated with many different titles over the years. In the past, it's been referred to as fixed assets, capital assets, but currently we refer to it as property, plant and equipment. That's fine. It basically is something you own. It's long-term, such as office furniture, computers, buildings, land. All those things fall into this category of a long-term asset. Depreciation. Now, we have a principle in accounting called the historical principle, which means whatever we paid for something that's a fixed asset, we can't forget what we originally paid for it. But obviously, it wears out over time, and we do some entries to reduce its value over time. And we put the write-downs into this, what we call a contra account, that goes against the original historical cost. And so prepayments, we'll spend a little bit of time in the next episode. But those are basically the accounts that we think about in terms of our assets. Liabilities, you may have a credit card, which you're using for the business. It's a very specific type of liability. You may have a loan or line of credit, very specific type. Mostly you're going to have accounts payable, which again, just like receivables has been set up for you. You may choose to enroll to charge your customers GST and PST. And so you'll need to set up a sales tax account, and we'll do that in a future episode. You may choose to administer payroll. You have to call CRA to activate a payroll account, but we'll cover that in a separate module all by itself. And, you may have other little situations where you loan money from a friend, a relative, whatever the case may be, in which you want to keep track of how much you owe them and when you pay them back. So all these are the types of things that we have in the liabilities area. And thirdly, when we talk about equity, we really have two aspects here: earnings that we retain and money that we take out. Now, having said that, we also have the opportunity, if we wish, to put money in the business to make sure it has enough working capital to work. In terms of income, I said that we're a consulting business, so it just gave us an account ready to go, which is very helpful. And so we don't really have to do a lot of work here. Expenses, well, there's a lot of expenses that businesses normally have, and this is all set up for you. So my suggestion to everyone is this is an area, just accept it. Yes, you may not have some of these costs. If you want to, you can rename some of these accounts, but really a lot of work is done for you in terms of setting up your ledger. So let's just accept that and work with that today. So today we've taken a big step in our little 15-minute session. We have learned how we can go about setting up an account for free with Wave Accounting to open a brand new ledger. Once we have the ledger, our job is to look at the chart of accounts and make sure it's meeting our needs. And so that's where we'll end our session today. We're off to the races, as they say. We are now using the software, and in future episodes, we will examine how we go about doing things like sending a bill to our customers, how we enter a bill from our supplier, and later on, we're going to explore how we can do things like interconnect our ledger to a bank account. And by doing that, we can save ourselves some data entry effort. Thank you for today. This is the end of our second episode, and there are more to come. Thank you so very much. Have a great day.